Hi, this is James Shug at Westpac with the London End-of-Day report for Monday, July the 16th. Well, we had some decent gains on Friday, but they were just held on to, or in some cases, markets pulled back a little bit today. At the open over the weekend, there were comments out of Germany which suggest that the Germans, and Merkel in particular, remain opposed to liability sharing without greater political control ceded to Brussels by the sovereigns that are receiving bailout assistance, and that saw the Spanish stock market marked down quite sharply today. On the data front, we had US retail sales, probably the biggest surprise of the day, down 0.5% in June. That's even weaker than our low-end forecast of minus 0.2% and the consensus forecast of a rise of 0.2%. What was really interesting was that the core retail component, excluding autos and gasoline, was down 0.2%. That's the third decline in a row for that series, and we haven't seen 3 monthly declines in that measure of retailing since the recession of 2000 and actually in the fourth quarter of 2008 it was. So a bit of a worry there that the consumer seems to have lost some momentum. Now, retailing only makes up a part of the broader measure of consumer spending, but certainly our forecast that household consumption growth in next week's GDP figures will slow from 2.5% in the first quarter to 0.9% in the second quarter is well supported by that retail report. In contrast, the New York Fed's factory index jumped from 2.3 to 7.4 in July, reversing part of its 15-point drop back in June. We had expected that drop to continue. Other Fed surveys from Philadelphia and Richmond are already in negative territory. They were back in June. But the New York Fed thus far has avoided dipping below zero. And some of the detail was strong too. Jobs were up and shipments were up, although orders did turn sub-zero. That's about it in terms of the main data flow. A few other bits and pieces, but the IMF confirmed, the IMF published their forecasts for global growth this year and next year. They didn't revise their 2012 forecast. They have a lower growth trajectory from here out than previously, but because they had assumed weaker than actually published, subsequently published Japanese and German GDP numbers for the first quarter, their full year 2012 forecast remains at 3.5% for global growth, but they shaved back their forecast for 2013 from 4.1% to 3.9%. They singled out the impact of Europe on some of the emerging markets, a slower US or moderating US recovery, and another year of recession for Spain next year, as other forecasters are already saying, as the main reasons for the downgrade to next year's growth forecast. Remember, their forecasts too, they assume appropriate policy. That is, they assume things like the European sovereign debt tensions will ease, and the aggressive fiscal tightening in the US that's already legislated for won't happen to that extent. Now, they may seem to be very optimistic assumptions, and we certainly think they are, and that's one of the reasons why their forecasts are a bit above ours. I mean, our forecast for 2012, Westpac, is 2.8%. We've got 3.8% next year, which is only just below their 3.9, but off a lower base, given that we've got a lower 2012 forecast. Right, so they're the main events today. Oh, yeah, Citibank reported, beat analysts' expectations. That's about it, really. In terms of the market movements then, on the stock markets, this is just ahead of the London close. The FTSE was pretty much unchanged, as was the French market. The German market is up 0.3%. The Spanish market down 1.7%, and the Italian market down just 0.25%. The Dow is down 0.3%. about 2 hours into the 2.5 hours into the day's trading. Should mention too, of course, Ben Bernanke's testimony tomorrow. Will he or won't he hint at the possibility of further quantitative easing, funded by the expansion of the Fed's balance sheet, or not? That's going to be a big question that will be partly answered tomorrow, possibly. Right. In terms of commodity markets, copper prices down 0.5%, gold prices up 0.1%, crude oil up 0.4%. So the gold price is $1,594 an ounce. Oil's on $87.43 a barrel. The Aussie dollar, it's at 1.023 at the moment. It's up a little bit from where it was when I chatted on Friday. We've got the Reserve Bank board minutes coming up. These are the minutes to the July meeting, and it'll be interesting to see if there's any hint in there about whether or not another cut might be forthcoming as soon as the August meeting. That remains our official view, although there's been a mix of data since then, stronger consumer sentiment, weaker jobs, so the minutes might help clarify that the timing of the next few cuts that we still expect from the Reserve Bank. Okay, that's it for now. I'll be back same time tomorrow.